Good evening, everyone. Welcome to the BISP solution. BISP is a tech company which provides technical solution across the world. So here I will today I will teach the travel expense planning. And if I talk about the objective of this travel expense planning is to teach how business will automate travel expense planning using a PBCS. We are forecasting travel expense for employee across different entities. Here I am trying to open it. Yes. So these are the sheet for driver based planning. So this is the travel expense forecast for different mode of travel. We can see here the mode of travel is a bike and car, and here the mode of travel is a different. Yes, we can see the sheet here. I'm just making sure to it so that we can see everything clearly. So here you can see the travel expense forecast in a bike and car. So the actual outcome, 1 minute, I am opening the file. Yes, here it's clearly visible. Yeah, so now we will talk about the calculation manager basics. So in our Excel sheet, yeah, we are here. Under it, we have talked about the driver based planning in our earlier classes, and we also identified the particular drivers under it, that these are the drivers, and on the basis of it how we can manage our calculation, and how we can apply the business rules under it. So that's the thing which we have to do, and which we have earlier covered. So this is the trend based planning. Here the trend based planning we earlier done. In this trend based planning, the actual thing is the actual data and the forecasting data, the combination of both data. Here the 4 plus 8, 4 month actual and 8 month of forecast. Here the same logic applied on it, like the 4 month actual till here, and the remaining is 8 month forecast. So actual data in and forecast data is quite different. You can see that the forecast data is a fixed. Here 2411, 2411, the same applied till December, but the actual data is quite different, and the difference is known as variance. So the same thing applied on it, and we also adjusted inflation under it, like when we see it, the forecasting, when we see it forecast data, like the travel expense still here, and the remaining would be forecast. And when we adjusted the inflation under it, the particular amount, it would be totally based on the formula. Here you can see that the particular amount, how it comes. So the actual amount of January month is 2544, and when we use the formula like 2544 multiplied 1 plus inflation rate. What is the actual inflation rate which are here? So we will do this thing, and then the resultant figure would come into picture. So that's that how we can do this thing. Here the P and L. So when we do driver based planning, trend based planning, the actual conclusion of travel expense uh, is that how our P&L and balance sheet would be affected by this planning, by this regular I could say the regular expenditure, I could say. So here in that example, you can see that the P&L statement, net income. Here the income would be uh, from training. So the income from training is a 7,000, and income from salary is a 5,000, and income on rent is 5,000. So the salary, rent, and training is different income, and the expense would be quite different. Here, here the expense is a utility expense. So utility expense is around 8640. Electricity and travel. 8640 is the utility expense, and training, salary, and rental expense is a quite differ. So when we do uh, when we when we when we compare both the things, the variance actually come. Here the utility expense would be electricity expense, it would be around 6,000, and the travel expense 2640. And when we sum up both the things, then actual utility expense 8640 would come. Profit before tax. Profit before tax is a 8360. When when we reduce our income from the particular expenditure, then the profit before tax at 360 is actual amount. it's it would come after reducing the expenditure. So we are taking the small example here, but in the corporate world, but in corporate world actually the figure is quite high, quite large. We generally do not pay taxes on such a small figure. So here this in the same way, 30% tax would also applicable. So the 30% tax would be 2508, then the profit after tax would be 5582. So uh, this is the actual calculation which depend on our travel expense. Here the 2640, and if it would be quite different, then our actual profit after tax uh, easily affect from it, totally affected from it. Here in the same way, balance sheet, current asset, total assets is a 7606. So the current assets would be 7206. Suppose in cash in bank, in bank we have 1000, in cash in hand is 50 rupees. Non current assets is around 400, 300 furniture and 100 of laptop. Here the same way liability would be totally short-term loan. Short-term loan would be 500. In short-term loan, actually we include the personal loan of 500. And the long-term liability, the same way home loan of 1000. We actually cover it. Mm, So the owner's equity is 5952. Uh, owner's equity is 5952. So here how it come into picture, when the total assets would be reduced from the liability, the actual amount would come into effect would be our equity. So the 5952 is our equity or capital, I could say. Common stock 100 and return earning 5852. So the actual structure of balance sheet is a total assets minus total liability plus owner's equity. So when we add up the total liability and owner's equity, so the total asset would be equals from it. I would, yes. So that that is the actual figure which come into picture. Here the travel expense. In the same way, the way of forecasting is totally based on it. That how the forecasting working. For this we have to connect this on smart view. Here we are facing and there is some issue in the instance, so we will not connect it with the smart view, but I'm giving you the actual example here so that you can understand the things easily. Here you can see Here you can see the base data forecast working, no product. So the temp we will create temp parent as one parent, and under it we will create some drivers. Drivers means child, like distance from office to home from office, and the bike mileage, fuel unit price, number of days travel in a month, and some other example also. Once we will create, uh, then then we will keep it in dynamic calc. Those who are parent and child, we will keep under it store. Under entity we will select the particular entity, like facility resource or any of the entity here. And when we will do this, that the fixed base data, here there are business rules. You can see there are certain business rules, uh, which we can implement here, like fixed base data. base data entity, fix base data entity, and all the dimension we will enter like this account entity scenario version, HSPView base data. Then we will keep the particular formula under it. If the approved budget and the monthly travel expense and the forecast, and so we will keep in double quote here. And if would exceed the budget, then else, and if exceed the budget here, then it equals to 2, and we will do and fix here. So that's the actual example here. Here the same way. Here the same way. The business rule is also here, like the total distance traveled in a day. So the actual business rule which would come into picture is a, like, mode of travel is a 1 means spike, so the total distance traveled in a day equals to distance from home to office multiplied by 2, and we will keep the column behind it, and the fuel consumption per day, same formula we will apply here. Travel expense cost per day equals to fuel unit price multiplied by fuel consumption per day. So that's the formula which we actually have to apply, and we will write the end fix in the later. Here the here the column we will also write in the last stage. So that's how we actually do the thing. Here you can see the same way. This is actually the driver based planning, which we have seen that how the driver based, trend based, P&L balance sheet, and the travel expense formula would work. Now we are facing some issue in the instance. That's why we are unable to log in. Otherwise, I could show you the business rule, how actually we have to implement that business rule in our day-to-day in our day-to-day planning. I could say the travel expense planning. So I hope you are getting the things easily. Uh, that is actually uh, that is the example which I have taken. So now I will close the session here. Uh, if you have any query, then you can just feel free to ask me. Thank you so much for your participation. Thank you so much for your uh, for your time. Now I am going to close this session. Yeah, that's it for today. Thank you.